Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Tuesday, September 18th, 2007. What a day it was, guys. No doubt about it. What you guys have to understand, I'm watching this market intraday, trading it in and out, and we're watching in the chat room with all my good traders in there and all my amateurs and pros and guys trying to learn the market. And we're watching this as it comes out, and all of a sudden, out of the clear blue, we see the futures here spike up. And this is a huge spike, guys. We're not talking about a 5 or 10 point spike up on the ES futures here. We're talking about a 30-point spike up. Basically from 14.95 here to 15.30. That's about 30 to 35 points higher in one candle. Literally, this is 5 minutes worth. So you had it move all the way up here within probably, this whole move took place, the first initial up move, all the way to this top right here in a matter of 60 to 80 seconds. Maybe 2 minutes in total. It was a monstrous move as the Federal Reserve cut the Fed funds rate by 50 basis points and the discount rate by 50 basis points as well. Alright? Now, normally we would say, well, why did we get such a move up? Well, because the market did not expect that. It's all about expectations. The market had priced in a quarter basis point, 25 basis point cut here, and the market had basically said, okay, if we get that, that's where we're charged right now. Even a 25 basis point discount rate cut, I felt was functioned in this market here. However, a 50 on both sides of the terms, both the Fed funds and the discount rate getting dropped by 50 basis point was far exceeding expectations by anyone. And we saw financials take off. Financials were the big winners today, guys. Goldman Sachs was up almost $13, back over 200 today. And look at this move up here. I mean, you're talking about a stock trading all the way down here, going all the way up there. I mean, we had some monstrous moves today, guys. No doubt about it. Well, getting into a little of the analysis side of things, well, what do we see for here? Well, on the S&P cash, we kept on talking over the last few videos about that 1505 level on the S&P cash. A close above that, and you have to reevaluate and say in the near term, we might have some more upside. And we did close on the S&P cash above 1505. So at this point, you remember we were talking about that head and shoulders pattern, and I'm going to go to the NASDAQ chart as well. NASDAQ daily. Well, here was our head and shoulders. Well, guess what? This bar just cancels out this head and shoulders now. Alright? You cannot look now for a head and shoulders breakdown, and that's why in a head and shoulders technical pattern, you always want to wait for a breakdown, and a breakdown here on the head and shoulders pattern was a break below that line. We never got that. We never even got below the 20, and that's why for the swing trade alerts that InTheMoneyStocks.com puts out, we keep it here. We were going into this meeting today, we were absolutely flat. Alright, no positions, no open orders, no nothing. And that was to be cautious because they could have spiked it up like they did here, or they could have dropped it just as much. And we did not know. We did not have a good reading on a breakout or breakdown. Thus, we were flat on our swing trades all around. And that was the right move. And I'm very happy that that was the way it was. Alright, having talked about this now, we see this move up. And look at where this kind of ended up here, which is kind of interesting in itself. We kind of closed above this line right here. Now we're going to have to see what happens tomorrow. Because in a technical level, we did close above here. So we want to see what our next point up is. Alright, now tomorrow is going to be a very interesting day because overnight sometimes the populations, the analysts, everyone kind of digests what the Fed was saying. And what we're going to have to find out is the full reaction tomorrow. Do we pull back a little? Do we continue higher? If we continue higher, this market could see another little push higher here. Alright, now we still see that this market will fall, but you have to go by the technicals here, and the fall might not be coming for a few weeks now, until we really, especially until we get Options X out of the way. Yesterday in the video, you guys noted, I'm sure, how I said, guys, be very cautious with Options X on Friday. Last month, on Friday, the Federal Reserve came out and dropped that discount rate. Well, guess what? This Friday's Options X again, and what did the Fed do? They surprised on the positive side for these markets, and the markets took off to the upside. Anyone buying puts, basically, from right here, where they did it last time, to here, expecting a fall, just got, you know, basically they're out of the money, those puts, and they're most likely expire worthless. And that's just the way it is, guys. We always tell everyone, puts are a scammer's game. Big money controls that market, and unless you're big money, there's very little reason to go into that market. Now, again, you can take shots here and there on drug reports and so forth. Those are the types of shots that I like to take on, you know, whether it's a DNDN type play, expecting an approval. You take a very low risk, high reward, and worst case, it expires worthless, you lose your premium. But in general, trying to play options both ways is a very tough game. Very tough. In any case, we saw another, as I said, a phenomenal move up today on the Fed. It was very interesting. Now, I want to talk a little bit about this Fed. The Federal Reserve seemed to cave today, and I hate to say it, and I hate to get a little sullen here, but the Federal Reserve seems to be saying, we'd rather save this economy now and cause problems for later. And otherwise, I can't see anything else. Now, I'm not saying that there's not going to be major problems based on this housing and credit crunch. There is. It is ugly out there, guys. I have friends of friends who are getting foreclosed on, who can't afford their increased mortgage each month now because of the increase in rates, and it's just not a pretty sight. So I understand that the Fed needed to do something here to protect a lot of the people that are in trouble. However, the dollar took a major hit recently, and it continued to take a hit. Okay? And this is the issue involved here, guys, is that when you lower interest rates, it affects the dollar because all of a sudden money, United States or currency, the U.S. currency becomes weaker when you lower interest rates. And that was why the dollar has dropped so much recently on anticipation that the Fed was going to cut. All right. In addition, what you're seeing here is a cut in rates causes other problems. The USO, boom, look at that chart on the USO. This is the USO. Oil is directly proportional, all right, to the U.S. dollar because it's traded in U.S. dollars. When the dollar weakens, oil has to go up to stay at the same relative price of the rest of the world's currencies. Therefore, you're seeing this move up today. All right, you saw it was kind of trading in this downward area, flat on the day, and on this news of the Fed doing this cut, oil took off, and the USO was up $1.38. Now, oil is extremely extended here, but geopolitical and weather events can always have impacts on that. In addition, there are other things like gold, GLD. Look at the GLD, guys, and this is no coincidence that commodities are taking off to the upside. Now, what's the long-term effect of commodities getting more expensive? And this is really what I want to focus in on today. Commodities get more expensive, eventually that gets passed to the consumer. All right? In what form? Well, in the form of inflation. It causes inflationary products to be put out in the market. And what I mean by that is everything we do involves oil in some way, guys. Whether it's running our car, whether it's our TVs, making our TVs, it all comes through. Food and energy is the key here, guys. I don't know about you guys, but food and energy to me is my biggest expense. All right, I do eat out a fair amount and so forth, but either way, any way you cut it, you go to the grocery store, you end up dropping $100, $200 easily. I'm sure those of you with families, it's a lot more. And my point is here is that you have wheat at all-time highs. Have you heard anyone mention on TV how high wheat is right now? There are runs on wheat, guys. There are countries that have said we have major issues because our wheat crops are so depleted this year because of drought. I just read an article yesterday on that, actually. How I think it was, I'm not sure if it was Australia or one of those, but they expected a 30% decrease. Anyways, long story short, wheat is up huge, gold is up huge, oil is up huge. Well, guess what? Eventually this has to come into our pockets, folks, as Americans. And it's very key to watch this. Now, granted, the Fed seems to have come out here and saved everyone in the short term, but the question that I have to ask, and we all need to ask, is, well, what happens in the long term? When do we finally pay the price for this? And that's the question, guys. And I warn everyone, be very careful, all right? Now, I'm not going to step up and take an SDS. A lot of people would be saying, well, take a 2-time short the S&P now. Well, no, you can't. You got to wait till at least Options X is over and then reevaluate, all right? That's my position here, and that for the most part will be our position, is that you really want to wait on Options X because anything can happen going into Options X, and it's not worth taking any risks. Now, what I do want to talk a little bit about is day trading. Quite a day trading day today, guys. We day traded this morning. Even by 8 o'clock, there were plays. Now, Lehman came out with earnings this morning, which helped the market initially, and Lehman jumped up right away. And right away, as a day trade, you could pick up any sympathy play. Now, sympathy plays are one of the key things in day trading. If Lehman goes, well, Bear Stearns might go, or Goldman Sachs might jump a little bit, and that's what we did. We picked up a quick dollar just a little after 8 a.m. on Bear Stearns there, as it jumped up in sympathy to Lehman. In addition, other plays like Countrywide would have gone. As the markets got stronger and stronger during the day, there were more and more plays, obviously. Now, what we did see today was that while we expected early in the morning for it to be a little active, we did get a very active morning. However, by about 10:30, 11, it did quiet down right up until that Fed. And as we can see, as we flip back to this NASDAQ chart, look at this move. I mean, you're talking about a mammoth move, guys. That's all there is to it, all right? And what we did see today was decent volume. Obviously, once the Fed came in, volume came in this market. So again, finally we got an up day with strong volume. Now the question still remains, where do we go tomorrow? Where do we go over the next week? Where do we go over the next 2 weeks? Now we could pull back tomorrow, we could go higher. It's very up in the air right now. We're going to have to see how the market digests what the Fed has really said overnight. But what remains the fact is that there are major issues in this economy, and we will be on the trigger here if the right situation arises to pull the trigger on a little short position here and start a position, probably Friday or Monday, but again, we will reevaluate as we go. Alright guys, take care. We'll talk to you tomorrow. Have a wonderful evening.